ladies and gentlemen, today we are going to ask and answer a very big question, which is why are traders so stressed out? Because one thing we're seeing across our community is that it feels like a lot of people got destroyed in the late July to August to early August swoon. Then the markets come up quite a bit and feels like a lot of people missed out. They're kind of in cranky moods. So we brought in my favorite person in the universe, JR Romero, to help us figure out what the heck is going on. So, JR, I don't know, why are people so cranky these days in the market?
I couldn't tell you. I mean, I like to refer to the 1979 classic hit "Apocalypse Now," where Robert Duvall, who plays Bill Kilgore, looks up in the air thoughtfully and says, "I love the smell of napalm in the morning." I think that's been the theme of this market. And if you're a day trader, we've had some choppier days, but we are prime for volatility every day. If you're a technical trader, if you're a scalper, it's just a never-ending opportunity machine. This market.
Yeah, smells like victory.
There you go.
Okay, all right. So I think that there is something interesting going on because I I swear to I don't know how many times I've heard traders say, "I want more volatility. I want more volatility. I want more volatility," and then when it comes, it seems like they freak out because I. Do you think people just really want a smooth uptrend? Because I mean, like people say they want volatility. Do they really want it?
Uh, it's like that saying, we all get what we deserve in the end. If you're managing a lot of positions, if you're a swing trader, obviously you want a trending market with a very strong market breadth, a powerful advance. If you're a market trader, you're much more neutral in terms of your bias. And we're in an environment right now. I've been saying this for a while that I thought we were going to put in a lower high in the S&Ps, which is turns out that's what happened. And that kind of move creates a lot of volatility. So if you're a day trader, this is a phenomenal time to be in the markets. And if you bought the lows, as many of my colleagues at T3 did in August, and you sold into the pop, you did pretty well as a swing trader as well. So I really have no complaints, honestly. I think
Okay,
this market's been terrific.
So are you enjoying this environment more?
I'm having a ball. I traded like 700,000 shares yesterday. I did my final count. My voice is hoarse today. People thought I went to a Metallica concert or something. It was just a crazy day yesterday. Just very easy to be active in an environment like yesterday's, and I think the market's just going to keep on giving us a tremendous amount of opportunities, as long as you're trading the price cycle and you know your levels, and you're technical and you're observant of what the market is doing. There's just, my opinion, just a lot of opportunity.
Okay, like do you think that these are like pre-election jitters or economic uncertainty? It's like the CPI and PPI are coming. Do you think people are a little freaked out by the next few months?
Uh, I'm not sure how much of it has to do with the election, although, I think whoever we get in the White House is going to be there's a binary choice coming, and they have distinctly different historically policy stances toward things like energy, potentially crypto, things like that. So that's definitely going to move markets to some expected extent, and there's some potential, depending on who you ask, upside risk in terms of taxes, in terms of in terms of capital gains taxes. But other than that, I think the volatility is more related to the fact that we're looking at a potential not so soft landing, and we have the two conflicting narratives: soft landing versus recession. and it doesn't seem to me like that narrative is fully resolved. It's causing a lot of tension in the market.
Okay, are you leaning towards any opinion yourself? Like, do you think it's going to be a hard landing? Do you think it's going to be soft, or does it even matter?
Look, I think in the midterm to long term, we're going to pay the piper, right? And I'm not going to go into some crazy rant like I go into the room about our fiscal deficit and all the problems assailing us in the potential midterm future. But I do think that inflation is a lot stickier than people want it to be, and we are potentially headed for an economic contraction. So, yeah, I think there's a definite recession risk on the table.
Okay, and I can't think of anything. I think I just had a little brain fart there.
Get with it, man. You had one job, Kamo.
I did, but you answer the question so fast. I don't know what I'm doing anymore. Okay,
You were
all right.
just
So okay,
you were gazing at my bald head, and you lost yourself in thought, right?
I can't remember the last time I've seen anything so beautiful. Since I saw an X-wing in person in Washington D.C., I haven't seen anything so magnificent. Okay, we're going to get into some tips for sort of keeping your head together and what to actually watch in the market to like sort of
Sure.
measure the tension. But I want to
Yeah.
talk a little bit about what you did today, because today you were in the room yelling and screaming at everybody. QQQ 462 is the level, and you highlighted Nvidia and AMD as names to watch. I'll just pop messages on the screen. JR,
Yeah.
nice call out on AMD, closing most of Nvidia long. Boom out. Somebody caught NQ futures.
Mhm.
Yeah. So what was so special about QQQ 462?
So basically, we had a closing pivot. We had a closing pivot at 461.84 ish. Yeah, 461.84. So I wanted to see the break of 462, the retest, which we got at 10:45, and the push to the upper end of the Keltner channel on the 5 minute. And that's exactly what we got. I was long AMD in the pre-market and called the move to what was it, 142.70, I think. Yeah, 142.70, and we basically caught the entire move pre-market to highs. AMD had a double catalyst today. They poached a key person in Nvidia AI, and also, of course, there were the comp play to Nvidia after the Department of Justice probe. So there was, in my opinion, a lot of potential upside to AMD today. I got in the pre-market and then added once it broke 141.11 for that move to 142.70. It was a really nice intraday play.
Okay, now in terms of overall strategy, since volatility is up,
Mm-hmm.
recession risk is on the table.
Yeah.
Are you leaning less towards swing trades now? Like, are your time frames compressing?
Yeah, we're not in a trending market. Like it's when your indices are running with really strong breadth and volume above your. I don't care whether you use the 8 in the 20, the 9 in the 21. Your fast and your mid-length moving averages need to be basically like railroad tracks going higher. I know a lot of other traders at T3 use that methodology. It's really important to, unless you're using other trading swing strategies, to have a nice trending market. And we're not there. We had a big AI boom earlier this year, and then off the October lows, the August lows, we had a just historic move higher. And now the SPX, the Nasdaq, they're giving us a lower high. So that leaves a lot of open questions ahead of key data and a Fed decision. And so you can imagine the risk appetite for holding positions over multiple days or weeks decreases exponentially. So this is not the time, in my opinion, to be putting a lot of swings on. We did buy Tesla at 203 for the move to 220. called that out in the room, I think last week, and that worked great. But that was just basically a very obvious technical bounce off of a key support level. But we don't have that nice trending market with really strong breadth. We put in a lower high on the 2, 4, and 8 hour time frame. So it's time to wait and see which way they want to resolve it.
Okay, I think we have Robbie in the comments might be trolling us a little bit. He's asking, should I hold SMCI or no? I don't know if Robbie was with us last week. JR said some very, very unkind things about SMCI. So JR, what do you SMCI?
I'm a live and let live kind of guy. I think SMCI is going much lower, but that's just me. You have a ABCD type of setup that's completed, and it's in a bearish consolidation, sort of an H setup. You crack 395.60, and I think you could easily see 245, 247 again. I think SMCI is heading lower for sure.
Okay, so kind of in keeping with your theme that it's just that there's no trend. So I feel like a common question out there is the AI trend done? Like it, should people even be kind of looking for those big picture themes right now?
Okay, so every market has basically a pace, a tone, and a character. Okay, and the tone is basically, in my opinion, the sentiment and the theme, both in terms of product but also in terms of behavior, right? And right now we sentiment's cooled somewhat around AI, but not the volatility, right? So I think there's still a tremendous amount of opportunity. You just have to be really technical. You have to understand basic market structure, and have a really good feeling for understanding market breadth and the pace of market. Market internals are really important in a market like this, right? Like you have to be watching, in my opinion, right? You have to be watching that DXY, those intermarket relationships. I told the room this morning, watch the break of the low of day on the dollar index, okay, and that was around 1024. I said because once that breaks, you're gonna get that break of 462.50 in the Qs, and you're gonna get your two-wave corrective higher. And if you superimpose those two charts, that's exactly what happened. The tick turned positive. The cumulative tick started to improve dramatically, and as did the advanced declines, the AD lines. So you have to be watching those things if you're going to trade a market that's technical. And there's a tremendous amount of money to be made in it, but you have to understand how markets work. Right? These things are like sneezing or like yawning. They're just technical reflexes of the market. These intermarket relationships are really important.
Okay, so why is the dollar so important now?
The dollar is always important. I think it's more important. Basically, we had our print this morning, our JOLTS print, which I believe came in lighter than expected, and instantly the market priced in another 25 basis points worth of cuts. It didn't fully price it in, but the probabilities became higher, and the dollar started plummeting on that. And on that key technical break of the DXY at exactly 101.31 was the actionable level to start looking for that breakout in the NASDAQ. So, this is the type of market we're in where, we're not trending. It's not like you can buy a gap and go, just set a 50-cent trailing stop in the Qs and go golfing, right? I love that kind of market. I have nothing against it, but it's not the market we're in, and we're here to make a living, bring income every day into our accounts, and that's what it takes in this type of environment.
Okay, so are you like do you have any expectation for the Fed? Like, do you buy into the 50 basis point rate cut coming soon?
I'm not sure anyone is manning the ship anymore. I'm not sure they know what they're doing. I'm not sure they're convinced that we're really in a soft landing scenario. What I've seen, the behavior I've seen from the Fed seems to me much more like they're just kicking the can down the road, hoping for meaningful signals uh, of inflationary improvement. And we have seen it to a great extent in some sectors, but others like food, shelter, and insurance remain very stubbornly high. I don't know that they know how to deal with that. So I put no credence in what the Fed has to say, and I'm really not sure what they're going to do. And I'm not sure how much it's going to move the market either.
Yeah, I mean, like I think we asked this question on like one of the group live streams that we did. Like, do you think a 50 basis point rate cut would be good for the market? Because I feel like a lot of people are they are waiting for the can just to be kicked down the road a little bit more, another jolt to keep the bull market going. But do you think a 50 basis rate point cut would actually be bullish?
I think so. I thank my lucky stars every day that I'm a day trader, and I don't have to think about these things too much. I have my levels, and I'm terrible at making predictions. I'm excellent. I'm very good at trading the chart in front of me and making money from it. So I tend to worry very little about these things because I don't have to. Thankfully, I don't have to manage a $5 billion portfolio. I have to, with a much smaller account than a $1 billion account, I get to create income every day, and when market conditions are right, I get to put risk on over many days or many weeks. But I don't worry about these things. They're completely meaningless as far as my day-to-day existence. I come in, I have my levels outlined, and based on what the market is doing, right? Based on what the market is doing, I decide what is truly actionable, not what I think, but what the chart is telling me. And that's really, the essence of the traditional Wyckoff approach to tape reading, right? Richard Wyckoff was a big fan of just letting the market tell you what to do. I mean, people obsess about their crystal ball and foretelling the future. Richard Wyckoff said, reading all the financial news and evaluating it will avail you to nothing. The market may rise on bad news and go down on good news. Then where are you? That was a very famous quote from Wyckoff, and he's right. It is, in this market, it's the people who are successfully reading the market and understanding what the market is most likely to do with a high, expectancy are the ones that succeed. The ones who understand the proper use of, reading market internals, reading market structure, and understanding what's most likely to happen are the ones who win. Wyckoff said, successful tape reading is a study of force. It requires the ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. And that's all there is to it, letting the market tell you what to do. That's it.
Yeah,
I don't worry about what the Fed is going to say, what they're going to do. I worry about the chart in front of me.
Yeah, I mean, do you think people are too obsessed with predicting the future?
I think they are. I also think that there's a performative aspect to this industry. Okay, you see all these talking heads on CNBC who aren't traders, and if you put them in front of a trading platform, they would just be losing money machines. So what do they have left to do is to talk about the market, talk shop, and predict the future. But that's not what trading is. Traders don't predict the future. They analyze the present, right? And take action based on the highest expected value opportunities. We find imbalances in supply and demand, and we look at those imbalances and choose the trade that's going to generate the most amount of momentum from that tension between supply and demand. What's going to happen when the Fed says what they're going to say is completely beside the point, and it is only detrimental to my trading. It has nothing to do with what I do for a living. It doesn't matter.
Yeah, I mean, like, do you think that can kind of that tension gets heightened up during like political seasons? Because I mean, like one thing we commonly see is people making economic predictions based on who's in power. So if you're on one side and the other side comes to power, everybody predicts. All these allegedly data-driven mathematical people, you can predict with 100% certainty if they're on one side, the other side comes into power, they're going to predict collapse. Do you think like traders are in danger of that? Especially, this is going to be a pretty spicy few months. Do you think traders are in danger of getting too locked into those like preconceived opinions?
Yeah, and it's just silly. Um, no single. I mean, it would be very difficult for a single politician to really destroy the U.S. economy, no matter how hard they try. You know, a lot of Republicans are saying if Kamala Harris comes in, we're going to be Stalinist Russia. Democrats are saying if Trump comes in, we're going to have fascism and market. I mean, it's all nonsense. We're going to be fine either way. Everybody needs to take a chill pill. You know, uh, there's going to be plenty of opportunity no matter who becomes president. Worry about the chart in front of you. Are you doing your homework every day? Are you preparing your levels? Do you know your levels? Okay. Like, streets in lower Manhattan. You understand your overhead supply and demand zones. Do you understand what the bond market is doing? Where the 10-year yield and the dollar index should be at. Are you watching the TLT? Are you watching crude and gold? Like, these are the things that are going to give you an edge in the market. Okay. Just sticking to some theory, unless you're like a really long-term trader, you're George Soros and you're making a single enormous bet, or, Stanley Druckenmiller, that like for the life of a blue collar day trader, these things don't matter. They're just distractions.
Yeah, and I think people forget that it's like impossible. I don't care what anybody says. Economics is not a science. It's like not even close, because economists can't predict anything. Like, they can't predict things out one quarter. Forget about
No,
multiple years.
I mean, look at the BLS revision we just got, which I found deeply suspect, but I'm not going to put my tinfoil hat on. Okay. But I mean, that was what, 800,000 jobs revision. Whoops. That's what I'm saying. You're oftentimes you're dealing with data that's incredibly faulty, and you see it. You've seen it so many times where the bond market just calls BS on the Fed over and over again. So, like, you have to pay much more attention to what the market is doing than what Fed officials, the government, or analysts are saying. Just look at the damn chart in front of you. Okay, there is power in that. You own that. Okay, there are multiple layers of opacity between you and reality. If you're reading Morgan Stanley research, if you're listening to Tom Lee, who's been great this year, I'm not criticizing him, or Kalanovic, or whoever else, or you live every tick of your life based on what Bostic and Powell say. These are not, in my opinion, long-term sustainable ways of making money in the market. The closest you are to reality, okay, is looking at a chart of the S&P futures. You're directly connected to what's happening in the market, and you own that. Okay, so as a day trader, if you want power, if you want transparency, just listen to the damn chart. Forget all the noise. You know what I mean?
It's reality. It's the only. I'll tell one quick story before we go. I used to work for a PhD economist, and super smart guy. And I used to like build his models. And whenever I would build the model and the result would come out the other side, if it wasn't what management wanted, we would go and change all the inputs to the model. And he said that's how. And he was a high up economist, and he said that's how economics works everywhere. It's like people make up numbers to please other people. It's very, very crazy business. Okay, JR, as always, This was a wonderful experience. I had a lot of fun. I appreciate you, your insights. I appreciate your haircut, everything. And guys, if you want to join JR in the room, get all his ideas live, go to t3live.com/JRlive. The link is also in the tweet. It's in the YouTube description, LinkedIn, Facebook, etc., etc. Just look down, t3live.com/JRlive. You can start for $49 and you can get all these fun trades in real time as they happen. JR, have a perfect afternoon, everyone out there. Be good to yourself.
Great talking to you, boss. Take care.